Chapter 6, Question 1. This question deals with inventory. It's the inventory equation that we've used time and time again, which is beginning inventory plus purchases minus ending inventory equals cost of goods sold. That's the equation that we're all familiar with at this point. But now it gets a little bit more complicated. This is the equation that a retailer would use, such as Walmart or Target, when they purchase items from a manufacturer for resale. For a manufacturer, however, remember that they generally have three different inventory accounts. They have raw materials, work in process, and finished goods. So they use different names for some of these accounts, but the concept is still the same. So in this question, they call it beginning balance instead of beginning inventory. Instead of purchases, they call it transferred in. Instead of ending inventory, they call it ending balance. And instead of cost of goods sold, they call it transferred out. So the account names are different, but they're still using the same concepts. Remember also that we can move around these variables and numbers in our equation. And as long as we have three of the numbers, we can always figure out the fourth one. So let's take a look at column A. It gives us the amount for beginning balance, ending balance, and transferred out. So if we plug that into our formula, it'll be 9750 plus transferred in, which is our missing variable, minus our ending balance of 8,000 equals 17,500 transferred out. So we want to get the variable on one side of the equation and the known numbers on the other side of the equation. So to do that, we're going to subtract 9750 from both sides, and then we're going to add 8,000 to both sides since the 8,000 is being subtracted from the left side. To cancel it out, you would add 8,000 to the left side and 8,000 to the right. So you would be left with TI equals 17,500 minus 9,750 plus 8,000 units. So TI equals 15,750. So we should all be familiar with being able to solve these types of problems from the prior chapters and also from our math class. So I'll let you do columns B and C on your own and question 2 on your own since it's the same concept. Question 3. Lennox Solvents manufactures a special fluid at its Hazel Ridge plant. The question gives us the amounts for materials, labor, and manufacturing overhead, and it tells us that the plant produced 1,050,000 liters in June. It also tells us that we don't have beginning or ending inventories, which is nice because that adds another complication to inventory calculations, but we'll deal with that in an upcoming problem. And we have to compute the cost per liter of liquid. So this question is pretty straightforward. It gives us the amounts for materials, labor, and manufacturing overhead. Materials is 2,499,000. Labor is 214,200, and manufacturing overhead is 856,800. So we total those to get a total cost of $3,570,000. Next, we divide that amount by the number of liters produced. And so we do the $3,570,000, divide that by the number of liters produced, which is 1,050,000, and we get $3.40 per liter. So that's question number 3. Question number 4 is going to be calculated in the same way, so you can work that on your own. Question number 5, I'm going to let you work on your own as well. It's very similar to question 3 and 4, except that it gives us the final answer, which is the cost per barrel, and we have to work backwards to figure out the materials cost. So just remember to convert the cost per barrel to the total cost, and then you can figure this one out pretty easily. Question number 6. This question adds a couple of additional concepts to our problem. It adds the concept of units in production, as well as the concept of equivalent units. So in the past problems that we've worked, they kept the scenario fairly simple for us, where we work on an item or a product and we finish it that same month. And so we have fairly clean calculations, and we know precisely how much is in our inventory accounts. But we know that in the real world, that's not always the case. And so in question 6, it talks about Duffield lubricants. It starts out with no work in process inventory, so that helps us keep things a little bit simpler. It starts production of 86,000 gallons of lubricant in December and completes 72,000 gallons. So the way I like to think about it is, for the 86,000, I think of 86,000 empty oil cans or oil jugs. They start the month with 86,000 empty containers. So that means that they had 86,000 units in production. So again, I like to think of the units of production as the empty boxes or empty paint cans or whatever the scenario tells us it is. Now, the facts tell us that they completed 72,000 gallons. So what that means is that out of the 86,000 empty gallons of lubricant at the beginning of the month, they filled up 72,000 gallons completely. And so those 72,000 gallons gets reclassified as finished goods. So if we do 86,000 gallons minus the 72,000 gallons that were completed, that means that we have 14,000 gallons that are partially complete. Now, for the concept of equivalent units, we want to know how many complete gallons do we have. So we have 72,000 that are 100% complete. We also have the 14,000 gallons that are partially complete. But we have to convert those 14,000 gallons, consolidate them into a complete number. So the question tells us that the ending work in process is 38% complete. So what we do is we take that 14,000, multiply that by 38%. And so we know that, and we get 5,320 complete gallons, or equivalent units. So again, for the 86,000 that we started, we completed 72,000 and reclassified them as finished goods. The other 14,000 were just partially filled, and they were only partially filled 38% of the way. So really, we don't have 14,000 additional units. We actually only have the equivalent of 5,320 units. So if we do the 72,000 complete plus the 5,320 that are theoretically complete, we actually produced 77,320 gallons during the month. So that's the concepts of equivalent units and units in production. It's important to keep those two concepts separate because they mean completely different things. So now let's go to the question. The question tells us how much materials and conversion costs we incurred for the month, $187,568 and $245,424. And it wants to know how much lubricant we transferred to finished goods. And then we also have to assign the remaining cost to work in process ending inventory. Now there's many ways to do a computation like this, but I'm going to use Excel to keep things straight. So first we'll put the number of gallons that were completed. The total gallons was 86,000. We know that 72,000 was transferred to finished goods. But what's remaining in work in process is the 86,000 minus the 72,000, and we get 14,000. Next, we have to consider how much of these gallons were complete. Well, we know that the finished goods is 100% complete. And the question also tells us that the work in process is 38% complete. So in the case of the finished goods, the number of gallons times 100% is going to be the same number of equivalent units. Now for work in process, remember that means that we have 14,000 partial gallons filled up. They are 38% filled up. So if we were to consolidate all of that lubricant, we could completely fill another 5,320 containers. And so if we add the finished goods plus the equivalent number of completed gallons, we get a total number of equivalent units of 77,320 gallons. Now for costs, the question tells us that materials was 187,568 and conversion costs 245,424. So our total cost is 432,992. To get our cost per gallon, we're going to take our total cost of 432,992, divide that by our equivalent units of 77,320, and so our gallons cost us $5.60 per gallon. So for finished goods, we had 72,000 gallons that were finished. We multiply that by our cost per equivalent gallon, and so we get $403,200 in finished goods. And in our work in process inventory, we're going to take our 5,320 gallons times the cost per gallon, and we get 29,792. And so if we highlight these two numbers, Excel tells us at the bottom what they sum up to, which is 432,992. That equals the total cost that we calculated earlier. And so we know that we did our calculations correctly. And now we just plug the numbers into the question. The cost of lubricant transferred to finished goods is 403,200, and the work in process ending inventory is the 29,792. So that's question 6. It's more complicated than problems that we've had in the past, but as you can see, there's a logic to it. Questions 7 and 8 are in the same format, so I'll let you work those problems on your own. Question number 9, Redfern Audio. We're going to see this company come up in a couple of other questions as well. Redfern Audio produces audio equipment. We make 2 different types of headphones, the standard and the enhanced. And then they give us data regarding the 2 models of headphones, the number of units produced, the machine hours that it takes, the units produced in the 3rd quarter, the machine hours used, the direct labor hours used. And then it gives us the cost amounts, the direct materials cost, and the direct labor costs. And then it also gives us manufacturing overhead of $864,000. The question is that we need to compute the predetermined overhead rate using direct labor hours. So as we've discussed in prior chapters, overhead represents costs that aren't necessarily traceable to specific products or services. So for example, a supervisor salary is probably going to be considered overhead because you can't tie down that supervisor salary to a specific product or products. And that's not to say that a supervisor role is unnecessary, but it just can't be tied specifically to certain products. So then the company has to figure out how to allocate those overhead costs to the products. And there's different ways to do it. And so we'll see in the homework different ways to do this allocation. In this question, we're allocating based on direct labor hours. So that's pretty straightforward. We have our total manufacturing overhead of $864,000. We have direct labor hours, 18,000 that we spent on the standard model, 18,000 on the enhanced model, for a total of 36,000. So we just do $864,000 divided by 36,000 hours, and we get $24 per direct labor hour. So the answer to number 9 is 24. So that means for every direct labor hour that's charged to a product, we're also going to charge $24 of overhead to that product. So in this case, we're charging a dollar figure per direct labor hour. For question 10, we're not charging a dollar figure, but we're going to calculate a percentage. In this case, we are allocating the overhead rate based on direct labor costs. So it's the same fact pattern, but now we're looking at a different line. So we're going to allocate the manufacturing overhead per the direct labor cost amount. So we're just going to divide the total overhead cost, which is $864,000, divide that by the direct labor cost, which is $900,000. And so we get 96%. So what that means is whatever direct labor costs are allocated to a certain product, we're also going to add 96%, which represents overhead. So if you're allocating $1 of direct labor cost to a product, then you're also going to allocate 96 cents of overhead to that product as well. Question number 11. Piper Recreational Vehicles modifies vans into RVs. They produce two models, the XC2 and the XC6. And it gives us the data which reflect expected operations for the next year. We expect to make 54 XC2s and 39 XC6s for a total of 93 units made. Materials cost is $40,000 for the XC2 and $70,000 for the other model. And then it gives us the total amounts for direct labor, depreciation, and miscellaneous costs. It tells us that they assign conversion cost based on the number of units assembled to compute the expected cost of each model assembled next year. And in the table below, we have to calculate what they call operation cost. They use that term interchangeably with conversion costs. It's the cost to run the operation. Materials cost, then we get total cost, and then we have to divide that total cost by the number of units to get unit cost. So first I'll calculate materials cost. We have the XC2 model and the XC6 model. The number of units is 54 and 39, and the materials cost per unit is 40,000 and 70,000. So we do the math. 54 times 40,000 is 2,160,000 for the XC2 and 2,730,000 for the XC6. So we can plug in those two numbers in our table for materials cost. Next, we have to calculate the operation costs or the conversion costs. Remember that conversion cost includes labor and overhead. And so the fact pattern gives us the cost for direct labor. They also give us the cost for depreciation. Now, remember that depreciation is the use of your machinery. And so that's supposed to approximate the actual cost for using that machinery. Remember that generally speaking, when you buy a piece of machinery, you can't just deduct the purchase price, you have to split out that purchase price among the years that that piece of machinery lasts, or allocate it some other way, maybe per unit produced. But in any event, depreciation is supposed to reflect the use of the machinery. And then they tell us that there's also miscellaneous cost. So direct labor is $905,550. Depreciation is $735,120. And miscellaneous cost is $633,180. So we have total operation costs or total conversion costs, whatever you want to call it, of $2,273,850. Now the question tells us that we're going to assign these conversion costs based on the number of units assembled. So if the number of units is 93, we divide total conversion cost by the number of units. And so we get $24,450 operation cost per unit. From there, we can multiply the cost per unit times the number of units. So for the XC2, the operation cost is $1,320,300. For the XC6, it's $953,550. And so if we sum those amounts, we get $2,273,850. And that matches with our total that we calculated earlier. So it looks like we did our calculations correctly. So for materials cost, we're going to plug in these two numbers in the materials cost line. And then for operation cost, we're going to plug in these two numbers in the top line. You add them up to get total cost. And then for unit cost, you would just take that total cost divided by 54 for the XC2, and then the total cost of the XC6 divided by 39 to get the unit cost for that one. So that's going to be question number 11. Question 12 is going to be very similar. It has the same fact pattern, but the difference here is that we're going to allocate conversion cost based on materials cost. So remember in question 11, we allocated it based on the number of units. This time we're going to allocate it based on materials cost. We already have most of the amounts calculated. We just need to calculate the percentage. And so we're just going to do the total conversion cost divided by the total material cost. So that would be total conversion cost of $2,273,850, which we calculated in the prior question, and divide that by the total material cost, which we also calculated in the prior question, to get 46.5%. So just take your material costs per model, multiply that by 46.5%, and then you get your conversion cost. Then you add those two together to get your total cost, and then divide by the number of units. So it's very similar to question 11, and I'll let you do most of that work on your own. Question number 13. For this question, we're back to Redfern Audio. If you recall the questions that we worked before, we had to calculate the predetermined overhead rate based on either the number of a product, based on either the number of units or a cost. And for questions number 13 and 14, we'll have to calculate those amounts again, but take it a step further this time and apply the rate to the actual numbers and then calculate the actual product cost per unit. So I'll do part A, and then I'll let you guys do part B and C as well as number 14 on your own. So for part A, we're going to calculate the individual product cost per unit, and we're going to allocate overhead based on the number of units. So the question here tells us that the overhead is $864,000, and the number of units in total is $32,000. So if we do $864,000 divided by 32,000 units, that gives us $27 per unit. So that'll be our overhead allocation rate. So now that we have that, we can calculate our totals and then divide by the number of units to get to unit cost. So we have a standard headphone and an enhanced headphone. Units produced was 24,000 for the standard and 8,000 for the enhanced. Our direct materials was 480 for the standard, 720 for enhanced. Direct labor is $288,000 for standard and $612,000 for enhanced. And for manufacturing overhead, we're going to do $27 times the number of units produced. That gives us $648,000 for standard and $216,000 for enhanced. So our total costs, standard will be $1,416,000 and $1,548,000 for enhanced. For unit costs, we're just going to take the total costs, divided that by the number of units produced. So that gives us $59 for standard and $193.50 for enhanced. So as you know, I like to try to do things in Excel. If you did yours in Excel as well, then you can do part B and C pretty easily. You can keep most of your spreadsheet and just delete the overhead part and recalculate it. Part B is going to be based on direct labor hours, and part C is based on machine hours, and both of those numbers are given to you in the fact pattern. And then for question 14, you would allocate those overhead costs based on dollar amounts, which would be direct labor costs and material costs. On those, if you have any questions, feel free to reach out and let me know. Thanks.